All right, Bricklin, we're going to touch on a hot button issue here, inflation. It's definitely weighed on the markets throughout 2022. You have a new report out today. What is your forecast for inflation going forward in 2023?
So inflation has definitely been the key theme of 2022. I think all of us have gotten intimately familiar with just how painful inflation can be. The good news is that inflation is expected to come down quite significantly in 2023. So as we look for, kind of a topping out of inflation over the next couple of months, we expect inflation to reach about 7.1% in Q4 2022, and then moving down to about 4.1% in 2023 by the end of the year. So quite a significant decline.
All right, so I got to ask you, I mean, obviously, you were showing your estimate right now, 7.1%. This is globally, though, for in developed countries, and then 3.1% by Q3 of next year. So I also want to ask you about another thing that's been weighing on the markets, which is the high employment rate here in the United States. A lot of people believe that high employment rate is one of the reasons why the Fed hasn't decided to pause or to pivot. So give me a sense of where you see employment going globally in the year ahead.
So employment is tricky, and it definitely depends by market and which economy you're talking about, as well as which local market and sector we're going into. But with rising rates in places like the U.S., we expect more than another 100 basis points of rate hikes across the world. There continues to be rate hikes, but there's that throttling back of rate hikes that I think is really key right now that we're seeing from central banks, including the U.S., but also in markets like Australia, Canada, and Europe, where central banks are looking at the rate of rate increases and throttling back based on what's happening in labor markets, what's happening in the unemployment markets, and what's happening with inflation. As inflation's coming down, they're starting to throttle that back. That'll limit some of that pain in employment markets.
So one way you can get the sense of the health of the consumer is how people shop for their groceries. What are we seeing when it comes to grocery shopping? Are people buying as much as they did during the pandemic? There was obviously a lot of stocking up and pantry loading during the pandemic.
So one of the key themes in our 2023 economic outlook from the Economics Institute is looking at trading down. So it's trading down product, trading down brand, trading down store. So if you think about when you go to the store and you are making that trade-off of buying the name brand product, or you're buying the store brand product, or you're thinking about where to shop, it's showing up most in groceries. And that really is showing how the consumer is changing its behavior today in order to continue to consume in the experience economy. So it really is changing their behavior, changing that aisle shopping at grocery stores, and thinking about how they can continue to spend on those experiences that they missed out during the pandemic.
All right, another factor that's really on the minds of the Federal Reserve here in the United States is housing costs. It's one of the factors in that core PCE number that they pay attention to. Where do you see housing costs here in the United States especially going? We're doing some more talking about the housing market here in New York City later in the show, but just throughout the United States, what direction is it going in?
Yeah, I heard the stat just now on rents going up in New York City. The cost of housing is changing, right? As interest rates go up, it's being passed along to the consumer, and mostly vis-a-vis those interest rate sensitive sectors. Housing and autos are the first big ones that get hit. And then you see that rotation out of those sectors into other sectors. So the good news is it does free up a bit of money. The bad news is that it certainly people connected to those sectors in housing and autos end up getting hit harder than others. So you're going to see that kind of shift, or that wallet transfer from those interest rate sensitive sectors back to the rest of the economy.